Very good evening, everyone. Welcome to Admiral Markets. My name is Chris. Tarantula is with us as well, and we're going to take a look at the year 2013, and kind of be a fun episode or webinar where we're going to take a look at all the market moves, the bigger moves, of course, and also maybe some personal touches here and there regarding trades of this year. With, of course, the mid-December point being passed, trading definitely quiets down, and maybe a good moment to do some paper trading, but also reflect about this last year. Funny enough, we'll also have a 2014 forward-looking webinar, but that will be on the 2nd of January, where we'll take a look at maybe what kind of trends we could expect in next year. So that is 2 weeks from now, because next week we will not have a session due to the holidays. So first of all, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Alrighty, thank you for your attention on that. Once again, welcome. This is Admiral Markets, and we're going to take a fun look at 2013, bit of a recap, look at some funny price movements, look at a bit of facts and maybe a trade or two, and put it all together. If you have, by all means, if you have anything you want to share regarding 2013, what you found interesting, or a trade that you liked a lot, we can pull up the charts and take a look at that. So that you're free to do that, of course. In the meantime, though, I will present the dollar-yen basically, and the odd. I'll be focusing it, and Talanta will continue with the euro and pound in the next part. So good. Well, recap of the yen and odd. Definitely weakness in 2013, right? Yen already had a weakness, in fact, in 2012 after a slow year in 2011, and the yen definitely continuing that trend in this year. So that was very good trading for people traders who like to trade trending environments or swing trading. Then the yen was definitely good to capitalize on that. And the odd too. Odd weakened at a different spot, different time frame. It weakened in April onwards, whereas the yen strengthened up to March and then went into consolidation. The Aussie was the other way around. The Aussie was in consolidation and then broke out of the consolidation in April. So the time frames were switched, but they both were trending with their weakness. So not much really dollar movements, but more really yen and odd movements, because also the euro and pound moved against the odd and yen as well. And there we saw big uptrends on all these crosses as well. So from now on, only charts though. I prepared this here. The magenta lines are basically moments where we have the New Year's Eve every year, so the year change. And this is the dollar-yen monthly chart. And sometimes it's just funny to look at it, and this is what I wanted to show you, that basically sometimes there's really not much net change in some years. One example is 2008, where we had, for example, a down after that year's open, up, down, up, just to really end at zero, flat for the year. So there was really no change that year. It was ups and downs, but nothing. Other years, of course, we saw a big net change. We saw, for example, 2007, a continuation of the downtrend, major pullback to the same level, and then a major fall again. 2006 was down. 2005 was flat. 2004 was up, 2003 was flat, so you can see different years. If we go to more recent price territory though, 2009 down, that's 2010, excuse me. 2009 was flat, 2010 was down, 2011 was flat. As I said, 2011, nothing really happened, especially this later part just went flat. It was very low movement. Sometimes the dollar yen was really just only bouncing up and down a pip during the day or two. And basically a financial crisis starting roughly here in 2007, 8, started continuation down, but now the huge uptrend. And it started at the beginning of 2012 with the first move And about 2013, we were about halfway that up move, as you can see. So the net change in 2012, definitely there, just like this year, definitely there. And we're probably going to close this year at its very high. This year's high is going to be roughly, most likely, although we still have 12 days to go, will be probably close to the year close as well, with the year open right here. So if you look at the year candle, it would be roughly like this, with hardly a wick at the bottom and hardly a wick at the top, most likely, for the dollar yen. Pretty bullish year. This is how it looks like on a weekly chart zoomed in. And you can see what kind of grand trend the dollar yen had. This is where we had basically the unfortunate events in Japan in 2011 with regard to the tsunami and the nuclear problem, or yeah. So that was a intervention probably. Then we had the downside here, sideways move, and the spike out of that consolidation as I was anticipating back at that time. And basically with 2012 and 13, it's just trend, right? This was a trend, pull back and continue. And this was in 2012, basically. So if we then now go to the next year, this was the starting point. This was the starting point of 2013. So if we then look at what happened in 2013, you can see it just continued and continued after that, right? This is 2012 once again. We finished right in here at close to 90 after already a 1,200 pip move. What happened after that? We had weeks of upside. Bullish, 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 bullish. A bit of a pause, but then still continue. Retracement, still continue. All the way up to, well, what is it? End of April, basically, for another 1,400 pips up move. Then, of course, well, after a big move like that, which really saw price move up close to 3,000 pips almost, we did get a correction. We got about 1,000 pip retrace, and price went to the 38.2% Fibonacci of the entire up move, which is roughly where it bounced, right? That's roughly where it bounced. And mathematically, it makes sense, right? It's about 2,800 pip move, 1,000 retracement. That is about 38.2%. So that was a dramatic fall as well, 4 weeks, about a month, and then we just went into a consolidation, and it slowed down, price slowed down, slowly but surely, made this triangle. But the dollar yen wakened up most recently in September. I was looking for the finish of wave E somewhere here, also in the wave count that is available for you to see, of course, on the Yadmore Market website as well. We're hunting for that wave E, right, finish there, and the continuation. That's exactly what happened, and boom, that was good trading. If you're following wave analysis, you were definitely expecting and looking out for that, right, potentially. So now again with the FOMC yesterday, the dollar yen continued to the upside and broke the top. So continuing and continuing. That was the 2013 summary here of the dollar yen. Pretty good movements, especially when we are trending here to the upside. If we look at the dollar yen now, not from the monthly or weekly, but maybe from the daily perspective, we can see, for example, that the trend, in fact, if we look at the starting point, exact starting point, 13th of September up to 22nd of May, which basically boils down to 1 year and 9 months. And the beginning of this year, well, it's about halfway, right, in price. Well, it's about 40%, both in time and price, right, if you look at it from this perspective. And you can see how the band basically is really nice support. Price was way above it for most of the time. And if price went back to the band, it was definitely a support level, bounce support, support area, sorry, right? So, and the price bounced off those levels, or bounced off that zone. And if there is a trend like this, basically strong trend going on, and really a multi-year trend, this is not some small trend. This is really a significant paradigm shift, in fact, from a monetary policy shift as well, from really strength to a lot more weakness. And you can see that how the currency behaves towards the in relationship towards the band we have here, and that is indeed the 34 EMA. Yeah, indeed, David. So the euro yen and pound yen even moved a lot more. In fact, those currencies were really exaggerated even more that the yen weakness, because in most cases there was actually euro dollar and pound dollar were moving up the last part of the year especially, but also in parts of the earlier this year, so they made even more move. If we take a look at this pound yen weekly chart, for example, with the band on it, you can see the first magenta line here, right here where I have the green dot. That started already in May 2012. The second magenta line is the beginning of this year. So you can see beginning of this year, price was around 142. So basically making already a 2,200 pip move during 2012. And this year, another 2,500 from 142. At the current level, it's around 170. So close to another 3,000. In total, though, from May last year, 5,000 pip uptrend so far. And yeah, quite amazing to see that. And as I was saying this morning in the live webinar, I remember the day of, like it was the day of yesterday, that I was hunting for longs in the 119 area. And yeah, it's quite amazing to see that now 5,000 pips further. I don't have a long from that zone, unfortunately. That would be cool, if only if it were 1 micro, in fact, just as a challenge. I didn't do that, although I did think that this would be a bouncing spot for the upside. I wish I did in retrospect, but it's not as easy as it sounds, of course, to keep it for 1.5 years. But it's a funny thought, though, I think. In any case, you can see the uptrend not always trending up. We did have consolidations, of course, indicated by these black trend lines here. We had substantial zones of retracements, like especially the middle one, but all of them were decent, especially the first two this year. That was something roughly around February, March, and in the summer here. This one was pretty big, of course, and if you're trading every day, that could seem forever, but you can see how eventually price moves back to the band and bounces off of that, and we got a smaller correction, which was already above the top, warning us that this is probably a break pullback, and we did get the continuation. We've actually broken already through 170, which is not visible on this chart because I made it, I think, yesterday. Before the FMOC, we're already at 171. I don't know by heart. We would maybe have to do it again, that analysis, but I think that if I remember correctly, basically the bigger fib was at 170. Now that we punched through that level, this could go even to 180 then. But that's something that we'll definitely dive into in the webinar of 2014 as well, what we could expect for trends in next year. But of course, it's difficult to focus on weekly charts when trading daily, intraday, because they don't really say much information. But now when we look back in 2013 and look back at the rest of the year, of course, we can look back and quickly analyze a lot of data in one time. And then, of course, it's interesting to see how even big time frames like this have certain patterns that play out. And although maybe not visible because we zoom in more when trading and don't look maybe a lot at these bigger time frames, you can see how they do provide guidance. It's just that the new price action information goes so slow that sometimes maybe we forget or it's just not relevant, but they do give, they do give information. It's just a slower process, of course. Obviously, in this uptrend, we see also a lot of bullish candles here. Not so many bearish. Bullish candles mostly closes very near the high, indicating strength. Bearish candles, more of a mix, more dojis, etc. So well, that was the yen, and I'm just going to show you one what I thought a trade that was the best. One kind of, if you can talk about best, one trade that I found awful, and one trade that would have been great, but I missed. So I'm showing you three types of trades: the great one, the stinky one, the bad one, and the one that I missed. Because sometimes it happens in trading. You have a plan, but it isn't executed. For whatever reason, it isn't executed. And this is actually one of those trades that I didn't execute, but of course I wish I would have executed. And well, it's not an excuse, but kind of like between you and me, it is true that I wanted to take it, but someone I was talking to said, kind of convinced me that the trade setup was not really the one that, well, somehow talked me out of it in a way. It's still my fault, I'm not saying, but just to make the story complete, I'll tell you all the details. Of course, that adds extra drama to it, because if I wanted to take it, then you kind of get convinced by someone else that yeah, it's not maybe the best trade, and then it works out so well, then you're like, oh my, of course. But anyhow, that's I'm not seriously annoyed by it. It's just for me more fun. It's a long time ago as well. It was beginning April. Dollar yen continued in its uptrend. Of course, still, as we know from the weekly chart, will continue in with this uptrend up to the 22nd of May. And this is March, April. So this is basically a bull flag. I thought an impulse bull flag breakout for more upside, right? And so this, to me, looked like a bounce off the 786 fib, and I was expecting a hook back for more upside. Now that, of course, it would fly up that much, and that the Bank of Japan would intervene was something I couldn't have ever anticipated necessarily that it would move up that far. But I was thinking about aiming for the minus 272 target. Of course, as you know, I didn't actually do the trade, but that was the original plan. With a stop loss at red, would have been an awesome R2R. And a trade like that, of course, even with a small risk, obviously very good for the equity curve. And wow, when this thing flew up, you can see that this was literally only took a day or two to hit target, whereas really a move like that could easily take a week or two before hitting the target. And that was an exceptional fast move for such a big distance of 570 pips for the dollar yen especially. Pound yen, maybe that happens more often. With FOMC, pound yen moved 450 pips within a day. But for the dollar yen, 570 is definitely something that usually doesn't take a day. In this case, it did. And while the 19-to-1 R2R, very attractive, of course. Well, what can you do? But was one that could have put on the wall of the office if taken. But would have, should have, could have, right? But still, that was what I wanted to show you that as part of 2013, and also to show that all these things are possible, of course, within trading. That's nothing we can do about it. I also promised to take you through the odd weakness, right? So this is the odd weakness, and this is the odd USD chart. And we're looking at the part of 2013, the part where we're trending to the downside. As you can see, it started around beginning of April. I remember very clearly talking to webinar viewers at that time, or in an article maybe I wrote it, I'm not sure exactly the media or maybe the exact format, but I remember telling people that this upside could be the last push, the last border before either fall or maybe it's a talking spot. And when with this this bearish bar, I remember writing an article that this is going to be within 6 weeks down at 91.50, and it's going to be fast. And 96 weeks was exactly this magenta line, and where was the price? At 92. I traded part of it. I didn't trade the entire move down. I think I got out somewhere in this consolidation, which still netted a roughly an 800 pip move, and the stop loss for about 4.5 to 1 R2R. I like the trade also because I publicly announced that trade in an article right here saying that this is downside, heavy major downside. It's going to be at 91.50 mid-June with a clear date, and that's what it did. Boom, down 91.50 mid-June. So both things, the fact that I said it and took it and got not the exact target but still close to it, the trade I wanted to show you. Then we got a still consolidation, one more fall before we got the bigger correction, and now falling again. And in fact, the Aussie might be even moving lower to 80 or 85. Let's see. That too is for the next webinar. In any case, this year's movement, obviously consolidation, down, hook back to 50, down again. And if we were to look at the yearly candle, what would we see? An open about here, I guess, a bit of a wick, and a close very near the low probably, although here too we have 12 days again. But currently price is right at the low of the year. The euro pound was what I found the most annoying trade. First of all, I took a couple of trades this year on the euro pound. I wonder if one of them went right. In fact, I would have to check it. So I didn't trade the euro pound much at all because I'm not a big fan, but the ones I took were also disastrous. So after that, I decided not to trade the euro pound anymore. It's probably just bad luck, but somehow the euro pound and I are not friends anymore. And well, what can you do? The trade idea was, in fact, that we got a reversal maybe here for more upside for a big grand continuation trend. So I wanted to continue that trade, and I took longs in the fib here for more upside. And well, I didn't like, actually in retrospect, that was not a good trade. We had a kind of a rising wedge. We went to the 50 fib. This was actually quite corrective in its nature. The price was still below the moving averages. There was definitely there was maybe a careful trend change here, but definitely not a confirmed one yet. And buying it without confirmation, with all these signals, and then not exiting when we had this big bearish downside. Oof, there were a lot of things that could have gone better with this trade. It was just downside after that. I think the lack of flexibility on that trade was low, so I really didn't like that trade, and that was of course a loss, full loss, and the euro pound moved down. So, yeah, I guess a bit at least. I'm not sure exactly where it went to, maybe 83 after that. So to continue, that was the worst trade. And to continue still with the odd weakness, the things I wanted to mention was this is a multi-year view. Here too, you can see the odd really not doing anything in 2011 and 2012, where it really net change was zero almost in both years. 1 year it was, 1 year almost zero. It did have some ups and downs like this in 2011, and then like this in 2012, and from mid-2012 to April 2013, it just went like very tight range, went sideways, very tight band. Within the band, of course, within that triangle already indicated by these trend lines, and the break was very sweet, very nice, as you can see, and that's the part we already focused on. Prior to this standstill, though, we had upside, right? That was in 2008 and 9. There were major upside. Actually, the odd dollar bounced off 60 after a tremendous 3,000 pip fall during the financial crisis. Unfortunately, we don't see it. And then it rose quickly. There was big net changes to the upside here. Big uptrend. Not only the odd dollar, but in fact the pound odd and the euro odd also moving up a lot. This is also a multi-year view. You can see the green lines indicating the close of each year, and the downtrend full in force, as you can see, and 2009 and 10 definitely net changes to the downside. Then too, on the pound odd, like the odd dollar, 2010-11 net change 0, although there were fluctuations here, a lot of fluctuations within the year. It was relatively choppy. This was more fluid, but also up and down. Net change, though, totally flat. And finally, a grand break to the upside. Here, moving 3,500 pips so far. Pretty impressive weekly band, price way above it, not even touching the weekly band here. That's why I expected a bit deeper retrace. Didn't happen. I continued from about 166 already up 1,400 pips from that moment. And here too, continuing as of recently. So yeah, that was a pretty big consolidation, just like the pound CAD had as well. Although pound CAD was maybe a bit tighter, I think. And now breaking to the upside. Got a question about big triangles like that. Is there any rule when breaking that huge triangles where profit will be taken? I read somewhere that traders measure height of that triangle, something like head and shoulders. Yeah, that's one way of doing it. I don't really actively use that rule. I always use Fibonacci targets or Fibonacci extensions. So what I do is typically take the first leg and put a fib on there and look for targets here. In this case, we couldn't do that because the bottom actually got broken. It broke all these bottoms. So the only target, I couldn't fib any of these. I could only fib something within to the right of here. But anyhow, to answer your question, yes, that is common. It is, I think, just the length is taken here and added to the bouncing spot. So let's take a triangle like this, and then we have two trend lines like that, and we get a bounce here to the upside. What I think one could do is take this first one and then add it to this bottom. Does that add up, T? By the way. Hi.
Sorry, Chris. Sorry, Chris. I was looking at my charts, which I will show later. So, what was the question again? Well, this what you paint is a sort of
the.
Yeah, continue.
Yeah, basically the triangle, the triangle, a measurement of height that is used as a profit place or a rule where the triangle can break to, for example. We would just take the height of the
yes, you take the height of that and that to the breakout of the triangle vortex. But what I do when I trade triangles, I don't use the classic measurement. That was a price analysis which was presented some 10, 15 years ago. And I don't like to use it because today we know that pivot points, especially important resistance levels, have much more reaction and do much bigger reaction to price action than those of projected price. You're right about that, but I don't use it personally.
Yeah. Yeah, I don't use it myself either.
That was a classic analysis when we didn't have computers, when we didn't have internet, and today almost everything goes automatically. Big banks, big hedge fund traders trade automatically. They have their own algorithm robots which do trading for them. So basically, they all do with mathematics. So we don't do that classic analysis anymore. That is all that is today. That doesn't do any good. And I'm really sure about it. That pivot points are much more significant and than those price projections per triangles. Chris, you still there? Oh, sorry. It seems that we lost Chris. I cannot hear him. Chris, if you hear me, because I know that he has some internet problems. Chris, you there, mate? It seems we lost Chris. Unfortunately, if he doesn't come back in next couple of minutes, I will need I will need to take on the webinar. So let's wait for Chris a bit more. Yeah, it seems no one can hear Chris. And it seems that his computer is, yeah, you see no connection. I don't know if he showed a live chart, but it seems no connection, so probably he lost his internet connection. So no worries, guys. I will take on a webinar from now, and we will wait for Chris. So let's see. I will transfer it. Okay. Okay, guys, here it is. Here it is. I think that you can see my screen. So we will wait for Chris. Until Chris comes, I will take a webinar. So just confirm that you can see my screen so we can continue. If you can see my screen, just confirm it. Great. Okay, I will continue. My presentation maybe will be a bit different because we agreed to do that analysis. You know that I am not a big fan of predicting price movements. Basically, I am intraday trader, as you know, and being intraday trader, I usually don't want to make any long or mid-term predictions. What I do the best I do. I just that longer term analysis and price projections are not my style, because I know what are my strengths and what are my, I can say, weaknesses. But intentionally I said weaknesses because there isn't really a weakness by itself. Predicting longer term movements can be very, very dodgy and very inconsistently. And you know that many big banks like Goldman Sachs Fund and Deutsche Bank, they made some predictions and they saw this year euro to 1.2000, and of course they reversed their prognosis. But because of that, I don't like it. Who knows what can happen tomorrow? You saw yesterday FOMC, you saw what happened. So basically, you know, 200, 300, 400 pips for us traders make difference, because I presume that none of you trade with 500 pip stop loss. So one of the reasons I don't like to make any long-term predictions is we don't know what can happen economically. Because I am a realistic. I stand with both feet on the ground, and I just don't want to get any science fiction into trading. Okay. So I will present the webinar the way I see it. These are my subjects for today: which currency pairs I traded during this year, important economic events of this year, mistakes. I will show you my mistakes, and I will do that on purpose. I won't hide it. I also will show you my successes, and that is I think that most of you know, but I will mention some of it. I will concentrate more on mistakes. Okay. Then we will do methodology update. I will just make a quick hint what I do, and conclusion for this year, and some surprises for next year. So the thing is, you know that I mostly do euro-dollar analysis, but when I trade, I mostly traded those three currency pairs. Those are euro-dollar, pound-dollar, and Australian dollar. You know that probably when I make session recaps, I also got into euro-Japanese yen. And you know that I will continue with my session recaps each Monday. And maybe there will be additional pairs. Or maybe, if you're interested, we can cover session recaps 2 times per week. Because as you know, all setups are valid for 2 days. Then also I also update my own method called Camarilla MACD. You know Camarilla MACD. And I added cross pairs such as Euro, Japanese yen, British pound, Australian dollar. You see all of those pairs I added. So by doing that, I expanded my portfolio, and now I trade not only Euro, dollar, cable, Aussie. I also trade other pairs which are basically which have confluence with other crosses. But usually what I do is I like to trade those dollar crosses, and also yen crosses have been very, very good lately. Market is constantly changing, so we need to adapt to it. That is why I adapt my methods to current market conditions. When we know when we should update and adapt our methods, and many traders don't do that. When we start to lose, if we have a losing month, as I had on it was October and the first part of November, then I needed to see where I made mistakes. And by constantly analyzing and doing adaptations and employing new strategies to well-known strategy of yourself, you are basically adapting to market. There are some constants like money management, risk management that should be constant. And I know that some of you are, even sometimes I do that over leverage because I'm almost 100% certain that the trade will be in success. But longer term, we shouldn't do that. So anyway, the half of November and this December were pretty good, excluding that FOMC yesterday, but I will get to that point. But anyway, again, they were pretty good, and I can say that I have adapted to those conditions which were happening last couple of months. Anyway, from July, I can say, to September, I cannot remember that I even had a losing month. All of months were profitable. And then, starting from that October, it was so-so, and then November was, well, it was a losing month for me and the first half, but then I have managed to cover it all and be positive for this month. And that was because I know what mistakes I did, and those mistakes were just mine, and I can blame no one for that. I will show you. Also, I didn't trade GBP Japanese yen due to very high ATR and volatility. I don't like to trade also metals, including oil and gold. And I stick to Forex trading. If I didn't have success, I wouldn't trade it. And to be honest, I didn't expect December to be that good, of course, because December is usually when big traders close their positions. But anyway, if you follow our session recaps, you could have seen that all of those, and most of those, I can say most of those setups were winners, and that is how I basically covered all of the loss I suffered in November. Euro dollar is just a quick review of the pair. You know that I trade that pair most of the time, approximately 70% of the time. It's negatively correlated to Swissy positively and usually positively with pound sterling, and that is the problem with Euro GBP, because sometimes when correlation goes negative with Euro and GBP, we can trade. Only then we can trade Euro GBP. Else Euro GBP is in range. Average broker spread is 0.5 to 2 pips. Daily average range 60 to 100 pips. Best time to trade is, of course, London session. Trading suitable to new and advanced traders. And those below are factors which affect euro dollar. Okay? All of those factors affect euro dollar. Interest rate differential between European Bank and Federal Reserve. Dollar strength drives euro dollar lower. Fed intervention to weaken the dollar sends euro dollar higher. Then a quick review of GBP. I have extensively traded the pair during second half of 2013 this year, and to be honest, well, I've been 70% positive with GBP, especially those couple of last trades where we have longed at the levels I did on weekly recaps. And basically GBP was, well, from time to time, especially if we trade, I did some news trading with GBP, of course not strong news such as FOMC for euro dollar, but some other news, and it was very, very good for me. Average broker spread is 1 to 3 pips. Daily average range is 80 to 150 pips. Best time to trade, of course, London session. Trading is suitable only to advanced and expert traders because GBP is, how can I say, for me it's the same. But I know that many new traders have problems with GBP while they don't have problems with euro dollar. But you know, sometimes those things can change. For me, especially if I followed that trade, particularly breakout trade for cable dollar, which I unfortunately I missed the trade because I got into euro dollar bad trade yesterday at FOMC. I will show you. But if I traded cable, that would be a success. But I have neglected the cable in favor of euro dollar, and you will see where I made mistake. Basically, it was correct, set up everything, but well, sometimes things don't go always in our favor. GBP, the interest rate differential between the Bank of England and Federal Reserve. A high yield and attractive growth in UK drives this pair higher. When you see good news for cable, 80% of the time this pair will go higher. And you should know that. That is not the same case with euro. Yesterday on FOMC, you saw what happened. It was 37.80, then 37, then 38.11, then 36.75. There is hardly to do anything with cable. Went, and then started to retrace slowly. But it wasn't news just specifically for cable. If you know, cable has its own specific set of news. And when news comes out, usually if news is good, this will drive the pair higher. If news is bad, if growth is going bad in UK, then the economic growth, of course, then this pair will go lower. And you don't have so many whipsaws, such as with euro dollar. But with euro dollar being the most traded currency, and that wasn't the case some 6-7 years ago, cable was most traded currency. Now somehow things are switching into favor of cable. Okay. Australian dollar, I have traded it less than euro dollar and pound, but more extensively during the second half of this year. It's negatively correlated to dollar CAD, positively to New Zealand dollar, and average broker spread is 0.5 to 3 pips. Daily average range is 70 to 100 pips. Best time to trade London session and sometimes Asia session. Trading suitable to advanced traders, and factors which affect Australian dollar. Interest rate differential between RBA, Reserve Bank of Australia, and the Federal Reserve Fed. Major news usually come around 3:30 a.m. Central European Standard Time. And now, I need to say some few things about other pairs. When I updated my trading method, I wanted to extend my trading and charting knowledge also to other pairs, mostly Aussie and GBP crosses. In the third quarter of this year, I started with Camarilla MACD update, which I use today. I added Euro Japanese Yen, GBP Australian Dollar, GBP Swissy, Australian Dollar Japanese Yen, New Zealand Kiwi, okay, then Dollar Yen, Dollar CAD, CAD, and Australian Dollar Swiss to my portfolio. So I traded all those currency pairs. I possibly won't trade gold in this year, and this is meant to be next year. I leave that to others, as I constantly expertise myself in the field of technical analysis for Forex currencies. There are some people who are trading gold exclusively, and they can help you with gold analysis. If I do that, that will be my responsibility to master it perfectly. I won't analyze it because I don't feel now to be a perfect master of cable. I am pretty sure in myself when I do analysis for these currency pairs which I trade, but I just am not, that is not my field. The most important thing is when you trade, you need to get to know the pair which you trade. So you need to know the pair which you trade. Technical analysis, it's not the same for each pair. It's not the same for GBP and for, let's say, gold. There are some different things. There are some historical levels which need to be charted. And I didn't do very much trading. I didn't do any trading with gold this year. So basically, what I want to say, when I master it, then I will say, okay, I will do gold analysis. All of these pairs I trade, I can do it with my eyes closed sometimes, because all of those things I have in my head constantly. That can be good thing, but that can lead to overconfidence. That can also be sometimes bad thing. We will speak about it. Now this is an overview of most important economic events of this year. Of course, U.S. government shutdown. As you know, the Council of Economic Advisors estimated that the shutdown in combination with the default scare resulted in possibly as many as 120,000 private sector jobs being created in just the first 2 weeks of October. Then there was the economic uncertainty that all furloughed workers deal with, cutting consumer spending and consumer confidence not far ahead of the holiday season. At the end of November, the Consumer Confidence Index dropped to 70.4 from 72.4 in October, continuing the drop that has been the pattern ever since the shutdown. Maybe that was the most important event of this year. Then USA nearly defaulting on international debt. Not only did Congress extend a refusal to raise the debt ceiling placed the United States market on guard, it had a negative effect on international relations as well. It was the last-minute deal that saved U.S. from defaulting. Then, bond buying program, well known as QE tapering on, which was ended, basically, just a part of it, not whole the program, just part of it yesterday on FOMC meeting. Federal Reserve on Wednesday yesterday took the first step to exiting from its controversial bond buying program, showing greater confidence that the U.S. economy will grow faster and hiring will pick up over the next year. In January, the Fed will reduce the pace of asset purchases for approximately $10 billion, and if the economy improves at a pace the Fed expects, the current president, who soon won't be president, Yellen will replace it, Miss Yellen. He said in a press conference that he could foresee the bond purchase program coming to an end by late next year. That means, in translation, that tapering, this is quantitative easing 3, tapering will continue during the next year. That should strengthen the dollar, but that is why I don't like to make any prognosis. We will see if our technical analysis will be in accordance to our fundamental analysis. Sometimes that, for us day traders, that is not of a big impact. Then unexpected ECB rate cut. Well, if you know, euro dollar traded above 35 towards the decision, and after the decision the pair went below 34. The euro was sold approximately 150 pips in a session. That was very unexpected from ECB. Then dollar sell-off on July 10th, and that was beginning of new uptrend, one of most important events, when the euro climbed 40 pips versus dollar, and also other currency pairs climbed versus dollar, where SEB kept euro dollar above 27.50. I can say that maybe that was orchestrated event along with Bank of Japan, Fed, and ECB. That was basically the start of uptrend, and dollar sell-off pushed GBP higher. Okay. Then, new budget deal in USA, the event which sent almost 1 million people jobless, finally came out in December. I will quote one of Fed members. This agreement makes sure that we don't have a government shutdown scenario in January. It makes sure that we don't have another government shutdown scenario in October. It makes sure that we don't lurch from crisis to crisis. That was, again, last minute deal that brought some strength into dollar and prevented a possible fall down of the market. Conclusion is, most important events usually mark big movements. Volatility increases and currencies are hard to trade due to many institutional traders closing their positions, and many other traders, such as retail traders, try to trade it. That creates whipsaw price action. This price action is bad for us. That is a big no-no to trading, and that can happen only on big news. You can see this like this when central banks are doing their corrections, when they intervene on Forex market, you will usually see this price action like this. Okay? This is okay. And if you see that, you know that intervention is being underway. But this is not okay, especially if it's done on higher time frames. Now, first I will talk about my mistakes, which I did this year. Of course, from time to time we can have intraday scalping trades. I won't talk about scalping trades. Scalping is a bit different, and usually when I scalp, my win-loss ratio is 70-30 or sometimes 80-20. These are mistakes which I did on intraday setups, and you will see why I did it. With every winning and losing trade, I keep tracks of performance. Why did I lose? That is the most important question. You should always ask yourself, why did you lose? What were the factors behind the losing trade? Both technical, both fundamental, and both psychological. What needs to be improved? You always need to analyze losses and adapt to current market conditions. One of my biggest mistakes, because as you know, I'm a full-time trader, I want to trade, sometimes I want to trade those news, even though many of my colleagues won't agree with me, and I know that many new traders are scared of those news, and sometimes I trade news. Not ordinary news, as I present in that cable trading, not ordinary news, everyday news, I can say. Sometimes I trade strong ones, such as stress test, post-FOMC, and bid rate announcements. Yes, I trade from time to time. Then I can say that this is mistake. Even though I had big winner trades, I know deep inside me that this is mistake. Because when you get slapped a few times, then you say, okay, is the risk worth the reward? Or is the reward worth the risk? If we just translate it a bit differently. I think that reward is not worth the risk, even though I have been rewarded many times, but I just know that this is a mistake and I will strive not to trade it. Even though I know how I should trade it, even though many of my setups are pretty close to being, well, 70%. I'm talking about this big news trading, accurate. But I can say that reward is not worth the risk. Then, trading with the phone. I have been so much into trading that I have the charts embedded in my mind. One of the biggest mistakes was losing 5% of the account in a single trade due to unintentionally clicking the trade while I was driving. I wanted to manage my trade. I had the phone in my hands. It was okay. It was a red light, so I stopped. And then suddenly my phone dropped and it opened both trades. It opened one single trade, but in long and short directions simultaneously with big lot size. And when I saw what happened, I just didn't know what to do. Of course, they closed both of those trades, and both of those trades were, because that wasn't a trade, that was a physical mistake. And I just don't use phone while I'm driving. I use Bluetooth headset, and I just don't need the phone anymore. Then, trading Asia when no volatility is present. Counter trading stronger trends. Listening blindly to others, because I have worked with many good traders, proven team members. I have worked for, I want to do marketing now. I will say that I was working 3 years. I worked for investment fund, big investment firm, UK firm. And when I traded with my buddies, even though we stayed in contact afterwards, well, that mistake when a proven buddy, a proven team member of you tells you enter that trade, it will be a sure hit, and then you enter the trade and it's a sure miss. Even though I respect others and I respect every trader, I don't do that. The last time I did that was in March this year, and I stopped doing that afterwards. And that, I cannot say that the last thing is a mistake. Maybe it's not a mistake. Maybe that's a mistake. But not taking all of the setups that are analyzed. Because when I do euro-dollar analysis, sometimes I trade other pairs. I told you other pairs which I trade. And usually I make my trading goal. Target price is reached, and I stop trading for that day. And because of that, I don't trade all of the setups that I analyze. I will need to make some improvements for that, because when I analyzed how good setups that I make are really, I don't say because I am overconfident or I want to brag myself or something like that. I just know that all of those setups, 80% of them are very, very good. But unfortunately, I cannot trade every time those setups, because when I make the plan for the day, I stop trading. But that thing needs to be revised. Because it's not for, I don't know, I can apply money management for that, but I want to respect my trading plan. I have my trading plan beside me, I write it down, and I know which trades I need to take in order to be positive for the day. And when I do that, if I hit all target prices, and sometimes I overshoot it, then I swore that I won't do any more trades. But very often it comes that analysis is very, very profitable, and well, due to other trades, not to over leverage myself, then I miss the analysis. This was the trade from yesterday. I had 2 entries on FOMC. Okay. This is what I saw, and you know my analysis. Again, if you have bought euro dollar yesterday, but I know that most of you didn't trade FOMC. But anyway, from maybe some of you traded it, and you see my target was 38.30 and subsequently 38.70. And basically, if you take the setup around levels which I mentioned, you would be in a huge profit. But I have taken the setup on that level, which I did the analysis, but I also, due to big volatility, I closed it. And that was after the initial drop, because the price dropped here and then started to go up to the upside. The first trade was good success. And then I see that trend line of neckline of inverted head and shoulders will be broken. But also yesterday's H4 on Camarilla showed that 38 is breakout point, and the first target should be H5, which went in accordance to my red level, of course, with my red level and with my setups. What I did is I longed the price at the first time it break 38, it went to 37.99, then struggling again to break 38, and on the second break I took the trade. It was a mini breakout pullback continuation. But what happened is price went to 38.11. I didn't want to close my trade because I wanted it to drive it to this level, and then bang, it went down. I scored approximately 45 pips of a loss, and that was a bit of, not big leverage, but just a little above my standard leverage. And that was the unsuccessful trade. Even though I immediately reversed the trade, I shorted it below this point and got halved the loss. The loss was halved afterwards, even though I know that maybe the setup was right, but due to big volatility and due to the fact that many institutional traders trade FOMC, they trade it even if they close the positions. That means they trade it. So I won't do FOMC trading anymore. I don't use sell-buy stops, Stephen. I usually enter on those patterns pullbacks. I opened 1 minute chart. I saw that the neckline is being broken the second time after the initial pullback. And then when I saw that H4 on Camarilla, which is really most of the times it's a perfect level to trade breakouts, it was a mini breakout pullback continuation on 1 minute time frame. I wanted to exploit it to the maximum, at least for, I don't know, those 30 pips. And I know that, and I just knew it, if the target was this H5, it stood on 38.30 yesterday. If it was broken, then the price will reach to 38.70, and that would be the perfect closing trade for this week. Because sometimes the week is very slow. We can do some scalp trades. We can do intraday positional setups, but sometimes they need time to develop. When you trade such big and strong news, there is almost a certain win or a certain loss. You can earn 30, 50 pips in 5-10 minutes. I'm not a beginner in this kind of trading. I know what I should do, but then again, just because the pure fact that many institutional traders close their positions while such strong news is being live on the air, just because of that fact. I won't trade FOMC and I won't trade bid rates because similarly they do a big volatility. Now I can see that law also has failed in FOMC yesterday. I know, guys, I know FOMCs. I told you, if you're not sure, don't do it. Even though my trade was in a profit, I failed to close it, and I consider it mistake because I lost 45 pips in that initial hour. Okay, initial reaction was sell. When you see this candle, that means indecision usually, but this candle was formed after the loss. What happened is the price went down to test this level, and when it pulls back with such a big momentum, then it should go up and it should reach the target which we projected. And I know the shock was big. My shock wasn't that big because by years of trading, I have learned to lose also. But the thing is, I consider this a mistake and I won't trade it anymore, even though all of us know that we can make big money with this. And if you do the trading like this, you need to go with slightly more leverage, right? Because pullbacks and breakouts are just big. Then again, unsuccessful counter trend trade after big rate cut. Yeah, and this is again a comment from Thompson. Let's see. Not that I will be trading any more of those news items. My mistakes have been a carbon copy of ones you listed. I got them out of my system a couple of years ago. The only way I suffered yesterday, got stopped out of 26 plus trade on break even. Calculated risk though, it could have gone in my favor. Yes, that is the risk we always take. And in this trade, 45 pips stop loss couldn't been good for 70 pips good trade, but I may close it if it reached H5 and it didn't break it. I probably would close the trade. But well, you know, guys, if I had 25 pips of a profit for this trade, I would probably place stop loss to break even plus 10 maybe. Okay, at least I would use that trailing stop, which is very hard to use on that big volatility, but it can happen. Also, you see unsuccessful counter trade after bid rate cut. You remember that it was in November when it was an expected rate cut of euro. It was from 0.50 to 0.25, and what happened is the price went violently down. This was my red level, and this was the closing price. The price tested the level, and I was counting on a retracement, because when you see a big, strong body, and if you see that the candle is hourly candle, usually there goes a retracement before the next drop. I wanted to exploit the retracement, and I have entered here at the close of the candle. Initially, I was in profit. I was in profit. I don't remember how much that was, but initially I was in profit. What happened then? The price again, bam, it spiked again. The same mistake, trading that big news, and again the same mistake. And again, what happened was, even though it reached the red level afterwards, well, I just couldn't make a stop loss that huge. So that I have identified that the problem with trading the strongest news possible is in placing the stop loss. Eventually, your trade, and usually your trade is in the profit afterwards. But just we don't, technically, it's impossible to place stop loss because that is not standard intraday trading. So my mistakes come for trading those big news. Sometimes these are mistakes which are not very common. Yeah, wide spreads don't help. Widespread, even narrow spreads don't help because nothing helps. We just should stay out of those trades. Even if we know that those trades can make a game changer from that month, we can make 10% of profit in a single trade. We shouldn't do it because it's not, well, it's not correct to trade those news. I know that we are always eager to trade it, especially traders who have traded this market for many years. I know the feeling. You have the urge to trade those news. But never mind. We have identified the mistakes. Also, this is Asia. I don't like Asian setups. You know, when I trade, I babysit my trades. I monitor my trades. And usually I close the trades manually. I have entered, this was also, again, my trade was in big, nice profits, but I overslept it because it was late and I have followed it through to, I don't know, 3 o'clock, and then I went to sleep, okay? I have put stop loss, I have put TP, and when I woke up, I saw that the price had already hit stop loss, even though it was in profit. That is why I always teach you and advise you, if you want to be a London trader, don't trade late Asia, because you will probably be oversleeping it, and usually the trades go in opposite direction. So my advice to you is always don't trade Asia session if you want to trade London session. Then this is, well, I can now, from this perspective, I cannot say, yeah, sometimes we cannot even get out with our profits, guys, and that is the big truth. You know that we know that we are in profit, but due to other facts, we just cannot get the profit and we lose the trade. And that is, I can see, Stephen, that you are, well, I can say experienced traders, because all of those things can happen from time to time, and we just need to make sure that we don't repeat it. Also, one of my mistakes, I cannot say now from this perspective if this is mistake or not, is many of those perfect setups I have missed because I have reached my daily goal a couple of years ago, and I really traded with I can say big money. That big money, that was big, maybe in my opinion, because I traded with 150k pounds. Those were big accounts, institutional accounts, and I just applied strict money management. I have when I trade also my account, I always try to apply that strict money management. And you know how I trade. You have seen my, you watched my webinar about money management. And when I reach my target price for that, when I reach target profits for that day, I stop trading. And due to that fact, there are sometimes I miss those setups. But I'm happy that many of you take those setups, and I'm even more happier when I see that you are in profit. That means that all of my work was not in vain. Even though I have missed it, I have helped you, and that is what I also like and what I want to say. That will be one of my successes later. I will show you. This is GB/US dollar overview. I won't do that extensively like my friend Chris did. He did a really extensive analysis on that particular pairs. I just want to say that this pair particularly started, this is in the bottom right corner, that is daily chart. And yeah, I know this webinar has gone a bit of out of time, but I will be very fast with this. Bear out with me. This is pound chart in bottom right corner is daily, and this is 4-hour chart, and you can see when it started to correct itself and when it started to break out with bullish reactions. As long as we are above this level, we can say that we have uptrend, even though this was a unsuccessful breakout. So basically, this was a whipsaw price action, but you can see that cable is in strong uptrend, and I expect it to continue, of course, with corrections in next year. We will do our session recaps. We will do daily analysis. So I may post also GBP analysis along with my euro-dollar standard each day, and we will see what will happen. But as we can see, cable was somehow underpriced these months, and then when it broke this level, it is really a huge uptrend. Even this M pattern is not valid anymore, so we expect it to go even further. Okay. Now, yes, this was also my mistakes. I have talked about it, and now successes. I am well aware of my trading trades that can help me. Those include knowing the right moment when the market will turn and reverse the trade. That is basically one of my biggest, how can I say, positive advantages that when trading Forex. My screening time and charting time gave me that inner feeling that by applying technical analysis, I know the turning points and I can reverse the trade. One of my big advantages is that I know how to apply good money management in most of my trades. I am patient, I am dedicated, and I have a plan. I always work with my inner self, and charting time has provided me with that feeling of potential turnout points and entry timings. Again, one of my biggest successes this year was winning 80 pip trade done in 15 minutes only, which was, by the way, slightly leveraged due to small 20 pip stop loss. I just cannot say if there are some contenders for a trade of the year, but you can see a great breakout trade. I was following this candle, then rectangle consolidation, and breakout of this trade was exploited very good. It was very fast trade, and I was out of the charts. I just went something, I don't know, I think I went to drink water, and I talked with my girlfriend for a couple of minutes, and when I got back I saw the price hit target price, and I was astounded. It was a really big profit for that particular trade. Then, needless to say, last 2 months of special recaps were when I did that Camarilla MACD upgrade, where almost every single trade went out in a profit. Not of all of those setups have been traded, but I can say that many of those setups were quite profitable. Trade of the year maybe was Euro-Japanese yen 80 pip stop loss, 8 and 70 pip target price, as I did trailing stop, and also second entry, the same thing, that rejections, if you follow session recaps, those were the rejections from the levels, 40 to 10, 40 to 12, basically also my red levels. And what happened is that maybe is the trade of the year, and all of those session recaps we have so far. Also, success is being able to give accurate euro-dollar analysis, contrary to many other analysts. When all traders thought that euro-dollar will tank down, I was thinking differently. On one of many examples, that's why I trade with levels. Usually, and many traders, my colleagues, told me that this will be the breaking point, but if you follow my analysis, I said long, don't go short. If it reaches, there is a long setup. So you know that I have, and that I trade usually contrary maybe to other traders and analysts, and I can see that that is my success, just being different than others. Okay, and being different is not a flaw in that professional sense. One of my successes is being in top 20 amongst, you see, 280K traders, almost 300,000 traders, and the thread which has over 2.5 million visits is real success. That is Forex Factory, the biggest website for Forex market in all websites. Is the one of the first 1,000 top ranked websites all over the world. So that impact which Forex Factory has on Forex market is enormous, believe me. And I have, well, I can say in my honest opinion that this is also a good success, and I can say that many of you, of course, are also a part of that success. Spiders then, of course, with so many visits. You are also, guys, my inspiration. Goodwill to help you along with Admiral Markets is always inspiring to me, as I love this job. Those are all comments which I have received many times. Some of these comments I have written it down to use it for myself. All of those comments from analysis, from my trading, and I wish to say thank you. By that way, you're helping me, because I'm happy when I see that also others do profitable trades, and that I have helped someone to make money. I'm really glad. And the conclusion of this webinar, and for some things I want to say from 2014, as you know, I don't want to give predictions. I don't know now where the market will go. I trade intraday, and I know, of course, quoted always, I can also be wrong. I will analyze it each day, and I will post those setups. I just can't do predictions because I'm not a clairvoyant, I'm not a prophet, I am a technical trader, and I know my strengths and weaknesses. Maybe there are some people who can say market will go there. It's easy to say, okay, it will go to 100 to 1.4000, but when it will go? So when I post setups, you know that I do it real time, pre-fact, and it's either win or it's either loss. There is no predictions. Concerning trading, I'm intraday trader, and I will post setups each day. That will also be in the next year. I will keep updating the blog with new analysis and possibly giving away some free trading strategies. We'll see about that, but that can be done. Profitable strategies. And I will work with Admiral Markets and will provide you with many surprises, which I would not reveal now. I will tell you when time comes during the next year, of course, and probably in first 2 or 3 months. Knowledge is power, so use it wisely. This is very important to know. Use wisely. I will conclude the webinar. Thank you for staying with us. Thank you again. And of course, guys, you also have a great Christmas and big success in Forex market. We will learn from our mistakes that we are prone to make from time to time. But either way, if you do it, of course, as I always say, with good money management, those mistakes can be just a small drawback to your trading, drawdown. So I wish you all happy week, Christmas, and talk to you very soon. Thank you very much, guys, and See you.